Hi folks, this is Sean Hyman from the Currency Cross Trader, and I wanted to come to you and shoot a video and do something different rather than our weekly article this week, since we don't have a trade that we're in. I also want to start off by saying that I hope to meet many of you at the Montreal conference that we're at right now. Look forward to doing that. I always love to put a face to a name and meet our subscriber base. It's really rewarding, and I love getting to meet you guys, see where you're from, what you do for a living, all that type of stuff thrills me. I want to direct your attention real quickly to the WorldCurrencyWatch.com blog, because I just posted a blog that I think that you will find very beneficial. It's the May 18th blog. Volatility acts as fuel to the yen, and it's just a friendly reminder, basically. The other day when we had the stock glitch happen in the stock exchanges in the U.S. and stocks plummet, and the Dow plummeted almost 1,000 points. Volatility spiked up tremendously. Matter of fact, when you're in this blog, let me just stop and say that you can actually click on the chart, and it will enlarge it for you. That way you can get it up to a size that you can see better. And volatility just went through the roof. I mean, the volatility on this index went from about 18 up to about 42 within a span of a couple of days after that. It was enormous. And look at what the yen did. The yen is the line chart here. The volatility index is the candle chart. The yen just spiked higher as well. It took a huge spike and then only paired back when the volatility index did the same. But you can see that when volatility is dying down, the yen tends to die down as well. When volatility picks up, so does the yen. It's been doing that again for the last number of months. Now, I say that to say this: there's really a lot of concern that I have in the financial markets, and that there could be something brewing here, and if it is, then we'll have some decent plays come through, being long the yen or short some of these yen carry trades. And of course, one of my concerns is the huge sell-off that I've seen recently in the Shanghai Composite Index, which is what I show right here. It's the daily chart of it. And if you were looking at this on a larger scale, which I want to stay pretty much zoomed in here so that you can see what I'm looking at. But if you zoom out and you look at a year or two's chart rather than the 6-month chart, you'll see this huge triangle that forms. And it recently broke out of it right about this 3,000, 3,100 level. And that triangle has a price target once it breaks out of about 1,000 points. And so we've seen, from 3,000 down to about 2,500 come off of this index. So we've seen about a good 500 points or so come off of this index, but it's really only probably about halfway done. So if Chinese stocks continue to fall another 500 points off of this index that only started off at a level of 3,000 in the first place, that's going to be a huge, enormous pullback, both percent-wise and point-wise, and could very well spill over into a lot of other financial markets. I know Australia has been somewhat sensitive to this, since they're such a big trading partner with China, and China gets so many of their commodities from Australia, and the Australian dollar has been really sensitive, like I said, to this, and it's hurt them initially. And so what we want to see here is, is this really just a pullback in a phase, or are we starting a new downtrend for the Chinese stock market because of the Chinese tapping on the brakes in their economy? If so, and it goes to affect Australia, it could spread to other places and really cause a lot of other indices to fall. And you can see by this chart that I'm about to bring up, this will be the Dow Jones Industrial Average. Let me pull this up, scroll here, there we go. That we took this huge hit, and then when we rebounded, everybody went, man, that was a sigh of relief. The only problem is that normally when you have these huge sell-offs on big volume, there's a big chance that there could be more downside to come. I'm not saying for sure that it is yet, because we haven't broken down technically through enough levels yet to say that's so. But I find it interesting that when the rally came back up in the Dow, it did not really surpass the 50 SMA, and that kept it in check, and it's headed back towards the 200 SMA simple moving average. And if it falls down below that, particularly if the volume kicks up as it does, it is a very bearish sign. and the MACD suggests that this could very well happen. If that happens, and you continue to have a sell-off in Chinese stocks, the Australian market soft, and you've got the Dow, Nasdaq, S&P, Russell 2000, all these that are basically charting out the same type of pattern heading downward, you could see a huge pickup in the volatility. If you do see that, then we're likely to have some really good short yen plays. In other words, being long the yen and short the yen pair. And one of the primary candidates that I'm looking at is the euro against the yen, and I'll show you why. Of course, it's been no secret that the euro dollar has fallen precipitously. I mean, you can just see this huge fall off. I mean, just in the last week or two, my gosh, we've come from 135 to 121 and change now. And you have to remember, this is such a big deal because the euro debuted in January 1999 at 1.1800. And here we are just a few hundred pips away from that price now. So what does that tell you? In 11 years' time, the euro is back to where it started, and it's just a huge calamity for those folks over there. Lots of problems, as we know, in Greece and Spain and Portugal and other parts. And I think one of the biggest hindrances that these guys have is that, okay, they've got a monetary union, but they don't have a union of government and a union of their taxing authority. And so you've got the taxing authority over there is fragmented, and you've got the governmental authority over there being fragmented, many different countries, many different governments, yet you have the same monetary policy and the same monetary union. And that causes a lot of havoc because, imagine, I'm sure you'll remember back in Katrina when the U.S. was just trying to simply get mobile homes down from up north down to New Orleans so that people would have a place to stay. And our own U.S. government had a huge problem in accomplishing this. And why is that? There's too many people there having to call and make too many different decisions, and it's just was somewhat overwhelming to them. They were very slow. They were very inefficient. Well, that was one government. Imagine if you had 12 governments trying to collaborate together and come to agreement on how they were not only going to agree on a policy, but also those 12 same governments implementing that policy. They've been slow to respond and slow to get results, and that's caused the euro to tank precipitously. Well, the euro yen is a currency cross that has really is at another make or break point, in my opinion. It's fallen off quite a bit, and once we get below, basically this level here around the 110.70 to 112 level, that support range, if that breaks, man, it's like look out below, and you can see this. Let me zoom out to a larger time frame, and I'll show you. If this level breaks, I mean, we could easily go back down into the 90s before we reach any real support, because all of that would be broken, and the next major time where we gain support, my gosh, was almost 10 years ago back here. And so this thing could fall quite precipitously if this level were broken. And so if we go below 110, which could happen very easily, because remember, we're under 112 right now, that could even happen in 1 day's time. One good down day. If that happens, I mean, it's like look out below for this pair. So that's one that we'll be looking into, and I'll be looking at some other yen crosses and watching the volatility and the volatility index, the VIX, to look for a upcoming trade. If I see a setup, we'll take something there, but I wanted to just talk to you about some of the things that I was looking at, some of the things that were rolling around in my head. Thank you so much for listening to the video, and I really believe you got a lot out of this. And I look forward to talking to you again sometime soon. Thanks so much, and bye-bye.